All right, let's talk to Temitope now. Good morning, Temitope. Thank you for joining us.
All right, thank you for having me, Jeanette.
Well, the EFINA report on financial inclusion in Nigeria indicates some growth, but noted that more has to be done. What is your interpretation of that report?
All right, thank you for having me. Before I proceed, I'd like to say that financial inclusion is a sine qua non to Nigeria's economic prosperity and sustainable growth. Because I would like to also emphasize that we have to begin to look at financial inclusion outside just looking at areas of banking sector or financial system that is profitable to the stakeholder. You have to begin to see it as a very important tool to reduce poverty, that is looking at the uniqueness of people that are financially excluded. The northerners, you have women and people that are less educated. So looking at the report from EFINA about financial inclusion as at 2020, it was reported that financial inclusion increased to 65% from 64% in 2018. So this is actually below the 80% target by the CBN. It's quite disturbing that, financial inclusion is still a bit low. But on the other hand, I could say that it's the performance is loud, although below what CBN expected for 2020. Because, for instance, if you look at what happened in 2016 economic recession, right? As at 2015, financial inclusion was 60%, but it declined to 58% in 2016. And, as a result of that economic recession, because basically you know that if people don't earn well, they won't have access to take to the financial sector. They won't even think about the financial system. And, research have shown that when there's a major economic shock, businesses move from formal to informal sector. Why? Because they want to avoid issues around regulation and a high cost of doing business that might come from cost of using financial products and services. So looking at financial inclusion itself, it's beyond just the banking sector. It includes both the access to financial products and services provided by the banking sector and non-banking sector, including both formal and informal side of it. So on the overall, it's quite commendable that banking sector side of the inclusion increased from about 40% in 2015 to 45% in 2020, because that's still the highest we've recorded so far since the survey began. So that's quite commendable. But I think when we look at it holistically, looking at the subcomponent of the banking sector side, because for non-banking sector side of the inclusion, it actually declined. That also contributed to the slowdown in the inclusion. So banking sector subcomponents, we have about 5 subcomponents from remittances, inclusion in terms of remittances, you have payments, and there's also savings accounts. Another one is how many people receive income using the financial products, and the last one is banking agents. So it's very interesting to note that banking agents is the major contributor to the little improvement we saw in 2020. Imagine that banking agent actually went up by from 3% to 19%, but throughout this period it had remained around 1% to 3%. So if banking agent inclusion had not increased significantly, I'm telling you, by now we'll be looking at a deceleration or a major decline in financial inclusion. So we have to just be happy that at this particular time, banking agents is actually gaining a lot of prominence. And lastly, I would like to stress why banking agent is gaining traction. For looking at this report by Edema Trust Barometer, it emphasized that 2 factors are very important to the banking sector: technology and looking at the trust for banking sector. For technology, trust have started declining. It has even declined over the last 10 years, while the trust in banking sector has increased. So it means people, banking agents, is helping to bridge the trust gap between, the people and technology. Thank you.
Okay. All right, but it seems that Nigeria has a long way to go, talking about financial inclusion. What steps do we need to take to ensure quicker inclusion of more people into the financial sector? And can we pick some lessons from other countries like South Africa and Kenya?
Well, looking at Kenya and South Africa, the financial inclusion is well over 80%. Kenya is about 53%, and South Africa is over 90%. And when you look at the structure of Kenya financial inclusion, we have 44% from bank financial inclusion, and you have about 39% from non-bank financial inclusion. But in Nigeria, we have 45% for banking financial inclusion, while non-bank is less than 15%. So we need to optimize other area of financial inclusion. That was why I started on the note that the banking sector will always look at profit optimization, and that might not capture areas or strategies that will actually include the right people that are currently excluded, which include, I said, the northerners, women, and less educated people. So we have to address issues around financial inclusion, which include three factors: access to financial products and services, cost, and awareness. Don't be surprised that over 80%, according to a FINA report, over 80% of adults are not even aware that there's mobile banking apps. They don't, and some of them don't even want to use it. So, for instance, again, the adult population that are captured in this survey, over 70% of them are in rural area where you don't even have enough teledensity and in terms of mobile coverage. So we have to begin to develop, particularly I think, the mobile banking and the also mobile banking and the banking agent. I said if not for the contribution of banking agent that went up from about 3% to 90%, by now we're talking about 56% financial inclusion. So we will begin to look at how to optimize all the subcomponents of the banking sector, as well as using telcos, that is the mobile money and telecommunication, to include more people. And again, I mentioned that trust in technology is a challenge. So this is why banking agents will serve as an intermediary, because if you look around the mobile money players, we know them, they are our neighbors. Some of them grew up together with us. You can trust them. So they will be able to bridge the gap, particularly in rural areas, bridge the gap of lack of trust in technology and trust in the financial sector. So we have to improve that area and also look at how to optimize telcos. And again, the cost, I mentioned cost, is also very important, because now we are looking at it. I think sometimes last year there was a rift between the telcos and the bank, and currently we are looking at increase in cost of transaction. So I think it's high time policies should begin to segment products or segment markets and differentiate products to capture the uniqueness of these people. Most of them are not educated. Let's begin to look at products that understand their uniqueness, and particularly, like I mentioned earlier, we have to build trust, because the achievement in financial inclusion so far is built on technology. More trust in technology, more financial inclusion will be achieved in Nigeria. Thank you.
All right, thank you very much, Temitope Omosuyi, for sharing your thoughts with us on the program. We do appreciate it. Enjoy the rest of the day.
All right, thank you.
An FX commodities market update is next after the break. Do stay with us.